to the Daily Exchange! I'm here with Henrik, and we're talking about fundamental analysis when it comes to cryptocurrencies. We're going to be coming right at you and tell you everything you need to know how to value those coins. Right after this, guys! All right, guys, we're back. I'm here with Henrik from Apollo Capital. He's the man of the moment. Henrik, how are you going this morning?
Very good.
Yeah?
Great to be here, Fred.
Woo! It's on.
Excited.
We're talking crypto, we're talking value. Just quick announcement, guys, about the coins that we're talking about right now. Bitcoin trading at $6,466. Ethereum at $225. Geez, Ethereum's taking a bit of a beating right now, Henrik. Any views on Ethereum right now?
Well, I think the ICO market is slowing down, so I think Ethereum really had a good run, obviously, over the last 12 months or so. There was a big ICO hype last year, and to get into the ICOs, you need to buy ETH, and I think that has driven up the price a lot. Last month, in August, we only saw 17 ICOs globally that closed.
Wow.
So that is really coming down.
17 ICOs.
Globally. I think the ICO market is trading between $200–400 million per month now. So I think that's the run rate going forward. And I think for Ethereum, fundamentally, we have to look at scaling. What's going on with Casper, sharding, Plasma,
100%.
all these scaling solutions. So I think that's key for Ethereum going forward.
100%. Ripple trading at 29.9947 cents. 9999. That's the only green we've got right now, Henrik. We're going to talk about Ripple in a second. I'm not going to let you get on top of Ripple right now. Sorry, XRP. We can't talk about Ripple and XRP. We're going to say XRP on the show.
I've been very separate.
XRP and Ripple have nothing to do with each other. One has created the XRP and it owns millions and millions and millions of tokens, and yet they are completely disconnected in their organization.
Well, maybe not. Let's talk about
For legal reasons, on this show, they are completely different. We don't talk about Ripple and XRP being connected.
Well,
I've been warned and many times, and I've been pulled up because that's just the way it goes. EOS trading at $5.10. Tether is down. Tether. Henrik, why does Tether move?
Tether, where is Tether? Isn't it at $1?
Where is Tether, Henrik? Where is Tether? Litecoin trading at 56 cents. Stellar down. Everything's a bit down. Dash is going down. You know, I'm interested to talk about Dash a bit later on as well with these masternodes. It's getting pretty cheap.
I don't have a strong view on the masternodes, to be honest. But I think let's talk about different way of creating consensus and running nodes.
Yeah. For sure.
Yeah.
All right, guys, we're going to talk about, let's move right on now. Let's really get into this. So, a bit of background, Henrik. So you are the guy who presses the button and literally is the man behind millions of dollars of cryptocurrency, buying and selling on behalf of people at the Apollo Fund. Guys, the Apollo Fund, check it out. It is incredible. These guys, Henrik is one of the best fundamental analysis guys I know when it comes to cryptocurrency. I respect his opinion. You've got to hear him out. This guy is the guy when it comes to making investments. Check it out. Way better than anything I've got to say about coins. But let's talk about this really importantly. So you're managing people's money. How many people?
We have an actively managed fund. I've invested in liquid coins like Bitcoin, Ethereum that we mentioned, second and third generation smart contract platforms, these fundamental building blocks, the infrastructure of crypto assets. We invest in early stage projects around the world.
Cool.
So
tell us, in a fund, you know, right now, you're making decisions about cryptocurrencies. They've never been valued before. You know, this is a very new market. Tell us about what's your sort of theory on how to value a cryptocurrency?
Well, so our thinking in the fund is that there will be a limited number of winners when it comes to what we call layer one infrastructure projects. That is these big projects that the crypto assets that fuel the decentralized blockchains. Bitcoin is a protocol for money, Ethereum is a protocol for smart contracts, and we build a diversified portfolio in the second and third generation of these smart contract platforms. And I think fundamentally there will be a limited number of winners in this kind of layer one space, and you will have different protocols optimizing on different variables. We have identified maybe 10 different properties like throughput, privacy, being censorship resistant, governance. These are all different properties of different protocols. It's very hard for a protocol, I think, to optimize on all the variables. So there will be different winners that optimizes on different properties. Maybe one app or decentralized application needs to run on a network that is very decentralized, that is censorship resistant. Maybe that's Ethereum. Maybe another app needs very high throughput. Maybe that's something like EOS or something like Definity, which we'll talk about more later. So there will be a number of winners where a big network effect will build. And then on top of that, we think there will be a middleware layer where you can have things like file storage, you have Filecoin, you have oracles, you have kind of these kind of building blocks, and those will be fueled by crypto assets. You have stable coins in that middleware layer as well. On top of that, you will have smart contracts interacting with these building blocks, and then on top of that, you will have the decentralized applications.
So it's like a pyramid, right?
That's right.
The pyramid of blockchain. I love that analogy. Okay, so tell us, we've got the different applications, different use cases, and I want to explain, because this is gonna illustrate Henrik's kind of thinking. Is really important. Tell us, Henrik, you know, there's been this status report come out. They've valued BNB, for example, very, very heavily, and now you've done a bit of a tweet storm, which has been incredible. And tell us, what's your analysis of what's your fundamental analysis of BNB?
Yeah, so I think many people make a mistake when they look at something like BNB. I think it's not actually a token that generates cash flow. It's what we call a utility token, maybe the most popular utility token today in the crypto asset market. The BNB coin is used to get a discount on the fees when you trade on the Binance platform. Binance is tremendously popular, as you know. I think the total commission generated on Binance this year might be in the range of $1 billion. And I believe you get something like a 50% discount if you use the BNB token to pay that commission. I think in the status report, the present value of that economy, if you like to call it that discounted fee economy, that is in the range of $556 million, I think they had for this year. BNB, I believe, have printed 200 million coins. They can burn half of them, so fully burned, they will have 100 million coins. That means that that you will have, if you have a velocity of 1, if you have a turnover of the coins of 1 times a year, each coin to support this economy of 556 million needs to be valued at $5.50. The velocity, it will probably be higher than 1, maybe somewhere 1 to 10. So a reasonable value of BNB maybe could be $1 to $5. Something like that. I think that's a general problem in the utility coin space, that you have a velocity. Over time, that velocity can be very high. The BNB coins are not burned when you pay the fees.
Yeah.
They're actually just recycled.
So they go back into the ecosystem, so Binance sells them again.
That's right, and they pay the employees with BNB coins, so they are redistributed. So you will have some kind of velocity. So I think you cannot apply a traditional net present value over a number of years. That discounted fee will decline every year as well. So yeah, I put out a little tweet storm on BNB because I think many people make a mistake when they look at something like that. We in the fund, we try to avoid the utility coin space because I think there is a lot of uncertainty. What is the value of the utility coin space? That's why we focus on infrastructure crypto assets, where we think much of the value will be created long term. Again, coming back to BNB, it's really hard to know what is the exact value of that coin. Anything in crypto is really hard to value.
So 550 million is what? That's the
550 million is what they said in the report, that the value of half the commission, you get a 50% discount.
Yeah. So let's break this down. Binance make $1 billion in trading fees. Half of them are being used for BNB. So that's $500 million of transactions. Sorry, $500 million of transactions.
Yeah.
There's 100 million coins. 500 million divided by 100 million is $5. That's how much it should be worth.
Well, and then you have a velocity. You might not only use that coin once. It might be recycled. So depending how fast you trade in and out of this coin, maybe you use it. Maybe the turnover is 10 times. There's a velocity of 10. Then the value would only be 1/10 of that. So 50 cents.
50 cents.
In the status
50
report.
50 cents.
Henrik,
call it 50 cents for Binance. I love it.
Again, I think we have to be careful. It's really hard to put one number. This is how much it's worth. But we can. I think
this is not financial advice, guys. Just so you're aware, we are not giving financial advice here. This is completely nothing to do with financial advice. We are merely giving our opinions. Henrik is not saying with Binance Coin is going to 50 cents. This has nothing to do with financial advice.
But I think it's a way of thinking about it.
Yeah. What's really crucial is that no one's speaking like this, Henrik, and that's why I think you're a pioneer. And that's why I think everyone needs to know about this information that you're giving them, and that's what the kind of information that Apollo is really good at unpacking, and that's why I have so much respect for you. So let's move on. That's
what we try to do, at least, and I think you have to do it. You have to bring some rigor, some discipline to investing in the crypto space.
100%. Let's move on. I want to talk about Bitcoin. What's your view on Bitcoin?
We really like Bitcoin. There's so much excitement happening in the Bitcoin actually behind the scenes, with the second layer being built out. The Lightning Network is going live right now. I think that's tremendously exciting. Maybe we can move to millions of transactions per second on the Bitcoin network right now. The network can only support maybe 5 transactions per second. So I think that's tremendous. We view Bitcoin as a form of digital gold. The gold market is a $10 trillion market. We know that there will only be 21 million Bitcoin ever created. That's 500,000 per Bitcoin if Bitcoin would reach the value of all gold that has been mined. Maybe you can assume that Bitcoin one day would reach 10% of the value of gold. That will be 50,000 per Bitcoin. I think that's one way of thinking of something like Bitcoin. But maybe it's better than gold because you can send it anywhere in the world for free instantly. It's probably easier to safekeep than something like gold that is physical.
It's not free to send, but it is free to store.
Right, but I mean, the fee to send is still very, very small, right?
Yeah. Relatively.
Yeah.
But that's really good. Like fundamentally, there is a limited supply. You've got a whole ecosystem hung off it to some extent, right? Bitcoin's paired with almost anything, really. I guess there are some coins that are paired with Ethereum only to some extent, but that's, I guess, the minority. You've got the brand behind it. You've got so many wallets. You've got futures exchange built on top of it. That's a fundamental one, which I think, and I want to bring up a tweet that you guys have talked about in a second, because it's a really important point. This one is probably the one that's crossed the chasm in terms of you can look at it like a value of the velocity of the ecosystem of the coin itself, potentially.
Yeah, and I think the breakthrough with Bitcoin, getting back to like the fundamental idea behind Bitcoin, is that for the first time you can do money as code, as software, and it's at the end of the day it's unstoppable free speech. And maybe in the future we can do companies as software, and you have unstoppable protocols that are the new next generation companies on top of things like Ethereum or Definity.
Yep. All right, let's move on. Let's talk about, let's bring up this tweet because I think it's really important. There's a tweet you guys have raised. There's a great post on the Apollo blog. It says, and I just wanted to call this out, and the post has been titled, "Your ICO doesn't need a token." And the tweet, I think it was just fundamental. I think everyone, this is a crucial part. I think this was the changing point really of the ICO market to some extent. You guys really have punctuated that. I'll just quote, advice to founders in crypto raising money. If you pitch a proprietary payment token subject to the velocity problem, you're going to have a very hard time. It makes it look like your token is just grafted on for the sake of fundraising. That's an easy pass. From Tushar there. Now, what I want to talk about and what I want to call out here is there are many, many tokens that were pitched saying, oh, it's the usage of the token and it's the velocity of it that will, grow and drive the space forward, right? That was a massive trend, and we all sort of rode that up. And I think I've said on the show many times, the music was on, and as while the music plays, that's all good and well, but that whole thing is going to go to zero. And fundamentally, there are probably some coins where they have crossed that chasm, where maybe Bitcoin could potentially be in that small niche potentially.
I think there are value creation around money or moneyness, store of value for Bitcoin, for example. There is value around governance. That's another big area where you can have value in the crypto asset space. If you have a pure utility token that is just used to pay for a service, most of these ICOs, as an example, can probably use Bitcoin or ETH instead. They don't really need a token.
100%.
It's just a way to raise funds, and for them, they're probably building an application at the kind of the top layer, consumer-facing application, and they're creating a new token. It's very hard to see a future where you have a portfolio with hundreds or thousands of different tokens used to pay for different services, meaning that you will just trade in and out of that very quickly. The velocity is very high, meaning the value captured in those tokens are really small. So I think that's fundamentally the problem. And those companies that are creating a consumer-facing application, a DApp, maybe they should be equity funded, more traditionally funded.
100%.
So
let's move on. Let's talk about, I think that's what's really important, right? I'm trying to unpick, guys, on this right now, on this video. What we're trying to do, as you're watching, is we're trying to pick out the value, right? So in antithesis to that, there are a number of protocols coming out. So we've got EOS, which is out, we've got Hashgraph, and then we've got sort of this new one, Dfinity. Tell us, what's your value analysis of Dfinity? What's your view on that?
Dfinity is a super exciting project. We invested in the project in the pre-sale. I think they might launch before the end of the year. I think they are trying to solve the scaling problem. They're creating a wall computer. They're using new cryptography called threshold relay that Dominic Williams, the founder of Dfinity, created. They have a world-class team. They have one of the founders of WebAssembly on the team as well. They have some of the top investors in the world backing them. It's a super exciting project that I think bring new technology to the space, and that has the possibility to really scale but still be decentralized. And that's the holy grail in building a smart contract platform.
Yep. So what's your sort of analysis on why you think Dfinity versus EOS or Algorand or Hashgraph, or like what's sort of
EOS? We are long EOS as well in the fund. We really like EOS, but it's a bit more centralized. I would say they have 21 block producers. They use something they call the delegated proof of stake.
Yep.
But
why Dfinity, Henrik? Why?
It's decentralized and it's still scalable. And the reason they can do that is that they're using new cryptography that wasn't available when Ethereum was launched. So it's potentially a breakthrough in creating something that is both decentralized and scalable.
Is the tech unproven?
Yeah, it's very new, of course. This whole space is super high risk. We don't know how it will play out, but there's definitely one coin or one crypto asset that we are very excited about seeing launched within the next 6 months or so.
Yeah, but still, it's one of those ones, I think it's really out there right now, really interesting to see decentralized and scalable, because I guess the other one, that we had George Salmon on the other week. He was talking about the 3 different trade-offs. So that one's really pitching down the bottom of the triangle there. Interesting stuff. Let's now move on to one which is, Joel, do you like Ripple, Joel?
I do.
Yeah. You like all coins, really?
I do, really. How did you know?
Yeah. Joel likes
Nice
all
guy.
the coins. He's a nice guy. Joel, you're the nice guy of crypto. I think I should be the bad boy. Henrik, tell us, what is your view on Ripple? What's going on there?
Full disclosure, we are short Ripple against Bitcoin.
Short, right?
And one of
I love full disclosure. Full disclosure, today I'm feeling great.
Fantastic. So, one of the reasons we are short Ripple against Bitcoin is that we think there is a risk that Ripple is a security, an unregistered security.
Sorry, XRP, my apologies, we need to be very clear.
Yeah,
Henrik. Henrik was merely referring to the XRP token, not to Ripple, just so we're clear.
Right, and I
XRP.
think that what it boils down to, what is the relationship between the for-profit company, which is behind Ripple, and XRP, right? Because when the SEC announced a couple of months ago that Ethereum and Bitcoin are not securities, what they pointed to is that those networks are decentralized. And I think it's quite hard to argue that XRP or Ripple is decentralized. So I think there's a problem. There's also a problem to see the value in the XRP token itself. A lot of the announcements, I think we have seen from financial institutions, implementing the technology is actually not using the XRP token as such.
Right.
It's using a private instance of the network. So I think those are some of the question marks we have around XRP and Ripple.
So are institutions actually using the XRP token? Henrik says no. No, they're not. Henrik, you know, I have a weird thing about Ripple. It's just one of those things. Sorry, XRP. Why does Ripple keep selling XRP and the price not, like, it just seems to be stable? How do they do
Right,
that?
I think they put out a quarterly report saying how much
67
XRP
million.
they are selling, right?
Yeah. 67 million Ripple. And they've got millions of it. Still in their little treasury box.
They control a majority of all XRP.
How is that possible? How is that possible? How is that? It's like, you know, like, imagine I'm pretending I've got some magic dust in my hand, and I'm like, you know, holding it in there, and I like give you a little bit, and I give everyone else a little bit, but I say like, and then I'm like, you know, this is the most magic dust, and I just keep selling it until I have actually the magic dust, and then in my hand I probably have none left. That could potentially happen one day.
Right, and I think they're giving away as well to some financial institutions to try to get people on board.
100%. All right, let's move on. Ripple, question mark, short for Henrik. Let's talk about stablecoins.
Stablecoins, I think, is super exciting. There's a lot of innovation happening in that area right now. So if you think about merchant adoption...
How do you value a stablecoin?
Well, a stablecoin is by definition stable, but some of them have a two-token system, so you have a governance token.
So like MakerDAO?
MakerDAO is one example. We are long Maker in the fund. We really like Maker. It's a decentralized, fully collateralized stablecoin, which is really, really powerful.
MKR,
we really like
guys, MKR for you. This is not financial advice. That is not a recommendation. Nothing we're saying here is any recommendations. Just have to triple check that.
So you can create DAI. You have to pay a fee in the Maker token.
What are some of the variables that went into you understanding which stablecoin to go for?
I think we are building a diversified portfolio. So you have different types of stablecoins. You have algorithmic stablecoins like Basis, as an example. You have decentralized collateralized like Maker DAI. And you have centralized stablecoins like Tether. We invested in the trust token behind TrueUSD. There's a fully audited version of Tether, if you like. MakerDAO is a decentralized on top of Ethereum. There are new stablecoins coming out. We are about to invest in a new project called Fragments, based out of San Francisco. So there are a lot of innovation happening in this space, and we are building a diversified portfolio to get exported to this space. If you have a stable coin, you mix it with a smart contract, you can do all kind of interesting things. You can do borrowing, lending based on a stable value, which is tremendously powerful. You can rebuild the financial systems using smart contracts, and I think stable coins will be a core ingredient
100%.
in doing that.
Let's move on. I want to talk about some topics which you're a bit passionate about. For example, Block producers on EOS. Block producers. Henrik, why don't block producers stake EOS?
That's a good question.
It is a good question. What's your view on that?
Yeah, I think.
What's your view on a block producer and EOS and the governance?
So again,
and
we
how
are
it
long.
operates?
We are long EOS. I think EOS is scaling to thousands of transactions per second. So magnitude's better than Ethereum, but it's more centralized. They have 21 block producers. They're using delegated proof of stake, but they're actually not staking tokens, as I understand it. And I think
They don't have a stake in the game.
maybe they are staking their reputation, but I think that's weaker than staking actually putting money behind or actually a token behind.
Well, I guess they put money behind their infrastructure. To some extent.
Absolutely.
Yeah,
They do that.
That's one thing, I guess. But at the end of the day, you're right. It's purely on reputation.
Right.
Maybe they should be staking some EOS.
And
Raise the bar. Make it even better.
Yeah.
I reckon Henrik should petition. Henrik for EOS governor. All right, guys, let's move on. Views. Tell me, Henrik, what is your view about proof of work and proof of stake? Do you think it's needed? Do you think it's long-term sustainable?
I don't think proof of work is a waste of resources that you hear sometimes. It's actually miners getting paid for doing important work. The important work in proof of stake is to secure the network, and the miners get paid for doing that. It's I think still the gold class way of creating a censorship-resistant network. People are experimenting with proof of stake. Ethereum might move to proof of stake, as you know.
Yeah. If Bitcoin, sorry, if proof of work is the gold class, what's silver?
Well, I think we have to see how proof of stake is playing out.
And what's bronze? Because that's normally where I sit. I think I've got a bronze membership in Qantas.
Right.
I'm sitting back at the back seats, just trying to tell me the protocol I'm going to have to get used to.
So if proof of work is gold class, maybe proof of stake will work, but I think it's still not as tested as proof of work.
100%.
And it changes the incentives structure in the network.
But long term, what's your view? What is your view of where proof of work will go and where will proof of stake go?
And there's also new interest. Maybe you should mention some new interesting algorithms as well. There's proof of space as well. Shia Abraham Cohen behind BitTorrent is creating a token base of proof of space. He's trying to create something that is very decentralized. The mining in proof of work is quite centralized, as we know. So
relatively,
there's innovation happening in the space, but we'll have to see how it plays out.
Let's finish on a really killer use case. I know you're big on this as well, Henrik. Lending and borrowing on the blockchain. Tell us what sort of developments do you see happening there?
I think this area is super exciting in the next 3-6 months. One of the low-hanging fruit for smart contracts is financial applications. Borrowing and lending is part of that. We at Polar, we teamed up with a company called Compound. They will launch a product, I think, the coming month, which will do lending and borrowing of crypto assets, of Ethereum and ERC20 tokens. And you will be able to, in a trustless way, borrow and lend crypto assets just using smart contracts, and that will create a market for shorting. You will have other companies like DYDX, which will create tokens that represent a short position in another token. It's all built on trustless technology, on smart contracts. I think this is super powerful. You will have, I think, the next generation will be contracts maybe based on real-world assets.
So lending ERC20 tokens, that would just be so intense because then you could short them.
Yeah.
That's a big deal. That's a big deal because you can't really short the smaller tokens right now.
That's right. And you will have derivatives, I think, as well based on smart contracts. Those financial contracts are well defined, so very suitable for smart contract technology.
Any views? We're going to close up there. Thanks, Henrik. That's really key. We are just trading, just so everyone's aware, shorts have gone up to 39,194. Yesterday was an absolute bit of a spicy day when it comes to cryptocurrencies. So we're back up at 39,000. We've noticed that every time we hit that 40,000 mark, there seems to be a real situation in terms of the price of Bitcoin tends to fly up for some reason because they're trying to hurt the shorts really badly. What's your view on monitoring these longs and short positions?
Yeah, I think that's super interesting. Yeah, I think the most volume is happening on these derivatives exchanges like BitMEX. That's where most of the volume is these days. Sometimes, maybe the last couple of days, we have experienced people trying to take out stops because there is low leverage in the system. And we're going up in a stairway fashion and taking the elevator down. We've seen that a few times. Longer terms, we'll probably be buyers of something like Bitcoin after these kind of market moves.
100%. Guys, that is Henrik telling you about the fundamental analysis. Obviously, if you want to get some more, he does run the Apollo Fund. Do check it out. Henrik does write some incredible posts, incredible tweets. Do follow him on Twitter. His blogs do come out. Is it weekly now?
We put out a content weekly on our website, which is apollocap.io.
Wonderful, guys. And thanks so much, Henrik, for joining us on the Daily Exchange. And everyone out there, do subscribe, do follow us. We will see you guys very soon.